We're talking about the world of currency trading, a place where trillions of dollars change hands every single day. It's a high-stakes game where fortunes are made, and sometimes even powerful nations can be brought to their knees. And that's exactly what happened on September 16th, 1992, a day that would forever be known as Black Wednesday, a day one man launched a financial war against an entire country. And unbelievably, he won.
I mean, just look at this picture. This is the face of absolute defeat, a surrender, really. So how did this happen? How could one person, one investor, take on the entire financial might of the Bank of England and win? That is the core of our story today. We're going to break down step by step one of the most ruthless and brilliant financial attacks of all time.
You know, every successful attack, whether it's in war or in finance, starts with one thing: a vulnerability, a weak spot. And back in the early 90s, the United Kingdom had, without really knowing it, painted a giant bullseye right on its own back.
Okay, so what was this bullseye? Well, it was a massive economic contradiction. On one hand, you had the UK deep in a recession. People were losing jobs, businesses were struggling. The standard playbook says you need to lower interest rates to get things moving again. Simple, right? But here's the catch. Britain was part of this thing called the exchange rate mechanism, the ERM. It basically handcuffed the British pound to the German Deutschmark. And Germany, well, they had the opposite problem. They were worried about inflation, so their interest rates were high. This meant Britain was trapped. It was forced to keep its own interest rates painfully high, effectively strangling its own economy just to keep up with Germany. The eternal recession mechanism. I mean, that says it all, doesn't it? People were feeling this pain. Politicians, the public, everyone was getting fed up. This ERM thing felt less like an anchor of stability and more like a straitjacket. You could just feel the government's resolve starting to fray. And in the shark tank of global finance, the smell of weakness, well, that's like blood in the water.
All right, so while Britain was wrestling with this crisis, one man was watching from the sidelines. And he didn't see a crisis. No, he saw the opportunity of a lifetime. He wasn't just going to place a bet. He was methodically planning a full-scale financial takedown. And that man was George Soros. Now, you have to understand, Soros wasn't your typical Wall Street trader. He was almost a philosopher of the markets. He had this big idea called reflexivity. Put simply, he believed that market perceptions don't just reflect reality, they can actually create reality. He looked at the British pound, stuck in the ERM, and he didn't just see weakness. He saw a system that was fundamentally broken, a house of cards waiting for a gust of wind. And he decided he was going to be that gust of wind.
So what was his weapon of choice? A technique called short selling. And yeah, it can sound complicated, but the idea behind it is brutally simple. You are betting on failure. Think about it. You borrow something you don't own, in this case, British pounds, you sell them immediately at the current high price, and then you wait for the price to crash. Once it's worthless, you buy it back for pennies on the dollar to repay your loan. Everything left over, that's pure profit. It is the ultimate predator's move.
And here is the blueprint for the assassination. It's a clean 5-step plan. Step 1, borrow billions, and I mean billions of British pounds. Step 2, immediately dump them on the market, selling them for a stronger currency like the German Deutschmark. This creates immense selling pressure. Step 3, just wait. Let that pressure build until the pound's value starts to collapse. Step 4, once it's cratered, you swoop back in and buy up those now devalued pounds for cheap to pay back your original loan. And step 5, well, the massive difference between what you sold them for and what you bought them back for, that is your profit. It's nothing short of a blueprint for a financial heist.
And the scale of this bet, it's just staggering. We're talking about $10 billion. Let that sink in. This wasn't some casual wager. Soros went all in. He bet the entire farm, leveraging his whole quantum fund. It was a signal to the entire world that he was absolutely certain he was right. This wasn't a trade anymore. This was a declaration of war.
So the target was set, the weapon was loaded, and the attack began. What happens next is one of the most intense, high-stakes dramas you will ever see play out in the financial world. And this was the spark that lit the whole thing on fire. A seemingly innocent comment from the head of Germany's central bank. But in the coded language of finance, this was a bombshell. He basically hinted that Germany, the big anchor holding the whole ERM system together, wasn't going to go out of its way to save the pound. For Soros and every other speculator watching, this was the green light they had been waiting for. The pound was on its own. As you can see the panic escalating hour by hour on the day itself, September 16th. The morning kicks off at 8:30 with the Bank of England desperately trying to buy up pounds, just throwing billions at the problem to prop it up. It doesn't work. By 11 a.m., they pull out a bigger weapon. They hike interest rates from 10% to 12%. A painful move. Still nothing. So, just a few hours later, in pure desperation, they announce another hike, all the way to 15%. But the market didn't even blink. Soros and his followers knew that the UK couldn't possibly survive such high rates. They were calling the government's bluff. And by 7:40 that evening, it was all over. A total surrender.
This chart right here, this tells the whole story of the battle in one picture. See this line here? That's the value of the pound. It starts to dip as the selling begins. And then boom, you see these two massive spikes? Those are the interest rate hikes, the government's last-ditch efforts to defend the currency. But just look at what happens to the pound. It barely even registers the defense before it just falls off a cliff. The attack was just too relentless, too powerful. So when the smoke cleared, the financial scoreboard was frankly shocking. This wasn't a game. There were real winners and very, very real losers. On the losing side, the UK Treasury, the British taxpayer. The final bill was an estimated £3.3 billion. That's money that was torched in a single day, trying and failing to defend the currency. It was a staggering financial loss and an absolutely humiliating political defeat. And on the winning side, George Soros. His profit from that single day's work is estimated at over $1.1 billion. This one trade cemented his legend. It's where he got the nickname, the man who broke the Bank of England. The British government's loss was, quite literally, his personal gain. Okay, so you'd be forgiven for thinking this was just a complete and utter disaster for Britain, right? A national humiliation. But here's where the story takes a really unexpected turn. The long-term legacy of Black Wednesday, it's a lot more complicated than you might think. And this is the central paradox of the whole event. What was called Black Wednesday in the headlines was actually dubbed Golden Wednesday by others. Why? Because being violently thrown out of that economic straitjacket, that eternal recession mechanism, finally gave Britain the freedom to run its own economy again. And if you look at the economy after the crash, you see something amazing. Once it was unchained from Germany's high interest rates, the British economy actually started to recover, and then to thrive. They could finally set policies that made sense for them, not for Germany. Unemployment fell, inflation came under control. It's a wild irony, but the financial assassination might have actually saved the patient. The shockwaves from this one day were just immense, and they lasted for decades. First, it totally rewrote the UK's economic playbook, creating the inflation-targeting policy they still use. Second, it created this deep, deep distrust of European monetary projects, a skepticism you can trace in a straight line right up to Brexit. But maybe the biggest lesson of all was a frightening one. It proved that a determined pool of private money could stare down a sovereign government and win. And that brings us to today. Black Wednesday was a story about how a rigid fixed system can be shattered by market forces. The battlefield looks different now, right? It's less about trading desks and more about digital currencies, DeFi, and globalized hedge funds. The players have changed, but the core strategy hasn't. It's still about finding the weak spot in the system and applying overwhelming pressure. Which leaves us with a pretty chilling question. Who is the next George Soros, and what is the next Black Wednesday?